Hi, everybody. Welcome back to another little group recording for SALTovation. Got your team here, Alex, Tram, Stacy, and Meredith. And we thought maybe we'd spend a little bit of time today on use tax. We're kind of talking through some of this, and we don't know that we've actually spent a lot of time specifically talking about use tax. It comes up in, kind of context because it's, kind of piggybacks on sales tax, but we've kind of had some use tax issues going on, certainly use tax audits going on. So I thought, we thought we'd spend some time actually talking specifically about use tax. So I think we'll kick it over to Tram today to kick us off.
Sure. Use tax is probably second tier to sales tax, although hard to imagine anything being second tier to sales tax. But clients really most get it, meaning like they know if their vendors, if they're buying things and their vendors aren't charging the right tax or any tax, and they're consuming something that's subject to sales tax, they should be remitting it to the jurisdiction that they're in and, paying tax and all that good stuff. But where it gets complicated is where there might be applicable exemptions. And so I've come across a few different situations where a client either they're very conservative and they go ahead and pay full amount of tax based on the rate where they're at, regardless of, if they truly owe it, because maybe they're buying things for resale, right? Or if they qualify for a manufacturing exemption, or possibly an R&D exemption. And because those rules are very nuanced, and I know we've talked about manufacturing in the past, but all those rules are very nuanced. So clients typically don't, either if they don't know what those rules are, they could definitely be overpaying. But I think the key thing with use tax is being aware that it is also, an obligation that businesses should be aware of, and if they're not paying attention to the things that they're buying and their vendor invoices, that this could be pretty costly in terms of like getting audited and then having to, I think for the most part, most auditors will look at expenses or purchases at 100%. So that's like real money there.
And when you say 100%, for those of us who may have not gone through an audit before, what do you mean?
Oh, so it's basically you're selected for audit for a given period, say, 36 months, and the auditor will want to look at every single expense for that 36-month period. So meaning credit card bills, they want to look at all your purchases for your business inputs, meaning maybe you bought software so that you can invoice your customers. So they want to look at all the purchases that you or expenses that you might have for that period.
So this is more
so look at everything. They don't sample.
A sample. There you go.
Right.
And just to take a step back, I think, again, just kind of for those folks who may be viewing that haven't had the pleasure of foraying into the use tax world, I think maybe some definitions could be helpful, because use tax, a lot like income and franchise tax, mean lots of different things depending on the jurisdiction that you're talking about in the situation. So what Tram has been describing is, I think, commonly known as consumer's use tax, meaning that you are buying something, right? There's also states will refer to things that called vendor's use tax and seller's use tax. Those are there are legal differences. I do want to stress that there historically have been legal distinctions between a sales tax, a seller's use tax, and a vendor's use tax. But practically speaking, just at a high level, those things are the same. But consumer's use tax is different. That's on purchases, not sales.
And realistically, that doesn't just apply to businesses. So like humans are actually subject to use tax, right? So if I bought something from a store in Wyoming and had it shipped, they have no nexus in Colorado. Me as a Colorado resident and as a human, should be self-assessing use tax on that purchase.
You remember the good old days when Amazon wasn't charging tax and
Right.
and everybody was buying, what was the story back then was, you got your free TV or tax-free TV, right? Well,
Yep.
if you were doing the right thing, you were paying use tax in Colorado on that TV that you bought from Amazon, and but
Right.
those days are long gone.
The Colorado income tax return does have a line for use tax, so you can self-report. I usually do as like I don't know, I probably bought $1,000 worth of crap that I didn't pay sales tax on it. Who knows? But
there are other states that have that as well. Like Utah has that. There are other states on their individual income tax return that will provide taxpayers the ability to self.
Funny story about New York is back in the day, and I haven't practiced in New York in a while, so this may not be true anymore. I don't know, but a number of years ago, there is that use tax line on the New York return as well. And the Department of Tax and Finance was taking a position that if you left that line blank, then the statute didn't toll for use tax. And if you put a 0 on it or any other number, then the statute starts running, right? So a lot of people got caught in historical audits on use tax, typically high net worth individuals. Nobody was auditing for that sole issue, right? But if you got picked up for some other audit, maybe residency or something like that, they would look at that item as well and take the position that there was no statute on it. Those were fun times.
Well, and kind of on that, in that vein, right, Stacey, we have a nuance here in Colorado related to our kind of business use tax, where I believe the due date is whenever you have a purchase subject to use tax. You go on, Revenue Online, you don't log in. It is not set up in your account portal, and Revenue Online is a Colorado business. It's a separate kind of entrance point to remit your use tax. In the traditional kind of consumer use tax that Tram was talking about. But on the sales tax return, right, I do believe, there are some lines for use tax where you can put something, but that does not make it your true use tax. So you can run into that you didn't file, you don't have any statute of limitations because it wasn't correctly reported.
Right. Yeah, and I think that there's a little bit of misnomer here in Colorado where, because it is a separate account, we see sometimes taxpayers trying to pay their use tax on the sales tax return, and that's not where it's reported. So that's just a little, sidebar as far as the Colorado reporting. Also, just it's more complicated even from the home rule cities, perspective. For use tax. The other thing that is kind of low hanging fruit for auditors is samples. So just kind of like something for taxpayers to think about. If you're taking samples, maybe you pay use tax on them in your home state where they're taken out of inventory, but then they're shipped to maybe a salesperson or something in another jurisdiction. There technically would be a use tax potential differential, meaning that in the state that the samples are shipped to, there may be a rate differential that maybe you didn't pay enough use tax in the home state, ship them to other state, and you actually owe a little bit of use tax in the state that they're shipped to. That's a really easy one for auditors to pick on.
Yep. So I think that's a great introduction kind of to use tax for now. I think as we talk, maybe this will turn into a salty discussion. But for now, thanks everyone for popping in. And this is the SALTovation team. We'll see you next time.